Hey you all, welcome back to Fin Talk with Anil. We are on day 20 of 30 days, 30 financial topics. And for our day 19, we kind of kickstarted this series on its own altogether about term insurance. And we also discussed about what is a term insurance. I'm adding the link above, so do check that out if you have missed. So for today, we are going to continue with discussing about different types of term insurance and when to invest, things to keep in mind, and those add-ons are worth it or not. Let us try to cover this up in a one video, right? So let's start with our day. Let us understand there are typically a lot of types of term insurances, right? Let us try to understand this one by one. There is something called level up term insurance. So, level up term insurance is mostly the basic type of term insurance where the sum assured remains constant throughout the policy term, right? So, which is kind of suitable for people who are seeking a straightforward, affordable life coverage, right? So, no drama, etc., right? But then there is something called a increasing term insurance. So, now as you grow in your life, let us say I took my term insurance when I was 25 years old. Yeah. So basically, I don't need a lot of money if I had to die, let us say this way, on 26 or 27 because I don't have a lot of liabilities. All I have to take care of is my parents or the EMI which for the home I took and so on, right? So it is very obvious that I understand my liability and estimate my liability and the much needed sum would be a crore or something, right? So I did that, but then with life you increase. Now you have uh, you married, you have kids. Now you want to cover the parents as well as the kids in addition to the EMI, etc. So uh, it is always not certain whether how much term insurance or how much coverage is enough, right? So it only makes sense that the increase in term insurance comes into picture where you have an option going ahead. You can fix those rates early, and then let us say after 5 years or 10 years, your 1 crore term insurance would now you want it to be a 1.5 crore or a 2 crore according to your increasing cost of living, increasing position, or be it something, right? So that's a thought. Now there is a decreasing term insurance as well. So it's quite opposite. Let us say in 20, 30 years, your kids are catching up. You wouldn't need that kind of assurance anymore. Mind you, this all assurance comes with a cost, right? The more the assurance is, the more the premium you have to pay. So this things kind of comes with an assurance and you have to pay for it. So makes sense when things are catching up, when you have enough savings in your bank over the time. Let us say you have made enough investments, etc. Now you figured out that you don't need that kind of a coverage, then you can obviously go for this kind of a plan where you eventually reduce the sum assured and in turn pay the lesser premium, right? So this makes sense. So now, written off premium plan is something nowadays, guys. So let us understand this way. Where nowadays it is ma been marketing a lot or marketed a lot, uh, where you pay a little more than what you are supposed to pay for any of the above uh, insurance policies. But then your premium, the so-called general insurance task is that you whatever you pay is been lost. You don't get anything in return, right? But then they give you your premium back, right? So this is all a financial calculation thing. We will see ahead in our explanation whether or not it makes sense how you should better calculate this for yourself before taking up this kind of add-on. Yeah. So there comes another thing which cause which calls a joint life term insurance, which kind of covers two individuals, typically spouses, right? So under the under this policy, a good option for couples who want a combined coverage, like if anything to happen for any one of them. So if you want to better understand this, then you should watch the movie Race, guys. I don't know the original Race from Saif Ali Khan. Yeah, so that would explain you a lot about a term insurance. Mind you, it's just a business, though. Don't take it very seriously. Yeah, so let us understand something more about when is the right time to buy a term insurance. Yeah, so have you, if you had wondered, if you had just waited, or let us say I am in my own example, let us say I have invested in a term insurance, or I took a term insurance when I was 25. Right now, I'm 4 years of my life has gone a waste when it comes to term insurance. I've been paying the premium and nothing happened, right? So you might be thinking, oh, okay, let us wait until another 5 years. Nothing great is going to happen, and also let us make it more clear. If it has been advertised a lot, if you take the term insurance early in your life, which makes more sense, right? The more you get older, the chances of your demise is getting higher, right? So the premium is kind of increases with your age. So let us say if I got an insurance back in my 25 or 24 for a crore rupees is worth a thousand rupees, $1,000 or something, right? Which if I take the same premium right now would cost me a 1,500. So you might even say that you have saved that 4 years of premium which you're supposed to pay, but then eventually when you go ahead, let us say in this example, let us say if you are taking it at a 30 age, a 15,000 premium, then the total number of premiums you would pay is a 40 uh, premium. So let us say you're 30 plus 40 years till 70 years you have took, then you're going to end up paying a 6 lakh premium, right? So instead you want to pay at start paying at 40, and your premium starts at 20,000, though it feels like you have saved those 15,000 rupees for the 10 years, right? But then eventually you will end up paying rupees 7 lakhs instead of 6 lakhs. Yeah, so that kind of makes sense to take this advantage early in your life, because you don't know, right? You might be planning on, say, taking this at your 30 or 40, but then you don't know what life has for you guys, right? So the above data is explains the premium gets directly affected if you buy it when you are old, etc. So moving on, some things to remember when you're some things to keep in mind when you're taking a term insurance, right? So the coverage amount makes sense in general. Let us say if your annual package, there is a I mean, the policy holders follow, and you can also keep in mind that if your annual package is about a 10 lakhs, you can go to uh, coverage which is a 10x, which is a 1 crore. If you're 20 lakhs, then a 2 crore, etc. So it's kind of an eligibility matrix as well, that kind of gives you enough money for the next 10 years, where your family kind of catches up on your absence, right? The kids catch up, or the investment would, the return would make it for on its own, right? So that is needed. So policy tenure again, which makes sense, right? Let us say if your policy is basically an surety for you to the family, right? So uh, at the most you are going to be working, or you are expected to work, or you are expected to provide the financial support to your family till you turn 60. That's like the basic working timing where you get your retirement, etc. Right? So it only makes sense. After that, your kids should catch up, your family plans should catch up, your investment plans should catch up, kick in, right? So it only makes sense that you take a term insurance till what point of time you're planning on working, right? So if you're planning on working early, or taking an early retirement, etc., then it doesn't make any sense for you to take a lifelong term insurance for that, because you have your other retirement funds to take care of you, or in your absence to your family to kick in, right? So it only makes sense. So a claim settlement ratio nowadays, all the companies come up with 99.99999% of claim settlements, etc. But then go through those terms and conditions nicely before you choose any term insurance, whether is there any foul, or is there any other issues with the company's settlement things. Yeah, so makes sense, right? So, and then the premium payment options. So some people want to uh, keep it simple, want to pay it month on month basis, like you pay for this month, you survive this month, and it's gone, right? So that also works. But then if you're someone who wants to pay yearly, then you can plan accordingly. But then uh, month on month makes more sense to me, honestly, because every month a certain amount comes and goes. I know for surety, but then if I have to pay it once a year, I might kind of get negligent, and I wouldn't have enough money to settle that kind of thing, and then I might even end up miss the payment. Yeah, so choose your options carefully, and additional benefits, etc. Whether those so-called add-ons or additional benefits like a critical illness benefit, or rider benefit, etc. You need to check that out if you're someone who's insecure about it. Yeah, so with that, let's end the day here. We have covered today different types of term insurance, when to invest, things to keep in mind while investing into a term insurance, etc. So for tomorrow, we are going to cover, is it, the add-ons, so-called, are they really worth it, or the return of premium, whether it is worth it or so, right? So stay tuned. Thank you very much for watching till the end. See you all tomorrow. Bye bye.